Hola guys, ¿qué paso? What's going on? This is Hala Pablo. Thank you for tuning in. Today I wanted to just do a little continuation of our Traumatized Token series. We haven't done these in a while. I wanted to kind of pick up on it now that I feel like we're about to have another sell-off soon on the macro in the markets in general, Bitcoin and the alts. And I wanted to talk again about some of the coins that the Security and Exchange Commission has targeted. And you'll find that the common denominator running through these is that they're all somehow linked to finance. They're all finance coins, and there's like 60 of them. We're obviously not going to do every single one of them, but the big heavy hitters, the players, the ones primarily on Coinbase and with the larger market caps, I figured we could go through. And if some of these pique your interest, it might be a good idea to pick some of them up once they go back down to retest the macro support lines. So today I want to talk about Near Protocol. It's not one that I'm heavily in at the moment, but I wanted to find out what it was all about, being that the SEC was going after it, and it was a block one level, layer one blockchain with its own ecosystem. I thought it was worth looking into. So here are the foundation's request or response rather to the SEC's to the Coinbase complaint. Now these guys are based in Switzerland, I believe. And so this is primarily a finance coin. It says here, we are aware of the news that the most recent SEC complaint against Coinbase published today alleges that the Near token, along with many other crypto assets, is a crypto asset that is being offered and sold as an investment contract and thus is a security. And then it goes on to say this SEC enforcement action is not against the Near Foundation, blah, blah, blah. In any case, the foundation disagrees with, and they all say the same thing, they all disagree with the conclusions of the Security and Exchange Commission. And they think that they're unjustly being deemed a security when in fact they haven't violated any applicable U.S. security laws. The foundation is regulated in Switzerland, and the Near token has been characterized as a payment token and not as a security under Swiss law. So, boom, right there. It is a payment token. You find a lot of these coins, a lot of these tokens that the SEC has the crosshairs on are like I said, are linked to payment, aka finance. And then we go like, what is Near Protocol? Features, tokenomics, price prediction. And here it says Near is designed from the bottom up to give end users with simple interactions, scale capacity over 1 million of devices, and enable developers with new and sustainable monetization models for their apps. Oh my gosh, there it is. Bing, bing, bing. Monetization being the keyword. As a result, Near is constructing the world's first community-run cloud capable of increasing the breadth of open finance and ensuring the future of the open web. So enough said. They've got a financial aroma about them. The potentiality could pose a threat to the central banking digital currency. And a lot of these they want to target. They want to stress them out. They want to create volatility, I believe. The Security and Exchange Commission creates volatility for two purposes. Number one, obviously, to scare off investors. And then number two, knowing that they're going to dump, that institutional informed interests can, aka their buddies on Wall Street and other investors, can sweep in and just accumulate a ton of this stuff at fire sale prices once they've gotten scared off retail. So knowing that, so now we go into the technical analysis side of it, and you see this pattern, this double bottom here, is very common right now in so many of the alts, and we see that where it's hit this support line, it's come back up, and then we have this steep kind of sell-off just recently. Now this was back in December around Christmas time. Actually, it was Christmas, Monday the 25th, when we had this sell-off. after this pump, this Elliott wave up, and now we're in the midst of this ABC correction. And we've come back down to hit trading range resistance where we currently sit. Now, the reason I'm doing these is if you're interested in maybe picking up some of these tokens, some of near, you probably don't want to buy right now. I'm not. Like I said, I only put charts up on tokens and coins that I myself am interested in. I never shill. I don't have sponsors. I don't need sponsors. And so I do this for me. This is something that has piqued my interest and I am looking at. However, I am not buying in right now. In fact, I'm not even dollar cost averaging it right now. I'm watching it. I'm watching several of these tokens that the SEC has come after, finance tokens, like a hawk right now, and I really have no interest in buying until we fall back into this range here. Now, we have a pretty strong support where we currently sit at $2.76. So this is the macro where I have it on the 2-day being played out, and then here we have the fractal range on the 30-minute forensic time frame where I've anchored the volume weighted average price, or the VWAP, to the selling climax here, this last bounce within this channel that you see it broke through on this wave that came out of it back into overbought territory. But then when it retraced, we had a conclusive bounce off of the channel. It flipped the resistance to support and thus started a range. So we'll call this the selling climax, and then this the automatic rally. And then here we've come back down, but you see we're not able to come down past trading range midpoint, the 0.5 Fibonacci line, this yellow line here, which is the midpoint between the selling climax and the automatic rally. We had a 3 drive here, up thrust, that brought it back down. But the point is that we haven't been able to go through mid-range yet, even though we've had some substantial supply volume here, and where we currently sit here, we've had larger than normal supply, but it hasn't been enough for the bears to break through. Yet at the same time, we're not able to go beyond and prevail through the anchored VWAP. So we're kind of in this tight channel where we currently sit on midpoint. Now, the whole reason why I do these fractal range analysis is the way you could use this is if somehow this is going to play out and consolidate a little bit more laterally, I'm sure. But at some point, the buying power and the selling power, they're going to come to a point where one of them is going to prevail. And if it is the selling power, then we can anticipate a fall through this midpoint, which I believe is what's going to happen if we're not able to go through this VWAP line. At some point, we're going to fall through. And if we fall through and here, I'll draw it out for you, what I'm talking about. If we have this like consolidation period. And at some point, if we fall through and the price retraces, then if we go towards this would be trading range support here, where the buying climax was, then we can reasonably expect the price on the macro to begin coming down as well and hitting the 0.5 Fibonacci, this time in the macro trading range, which would be $1.90. So like I said earlier in this video, if we fall through back into this range and we start trending down back towards the midpoint, then that would be the time to start picking up some of these tokens. If you're inclined to invest in near. This isn't financial advice. I'm not even buying it just yet. I'm just looking and I'm whetting your interest. I'm piquing your interest in some of these things. Look, guys, if the SEC is after it, there's a good reason. My ears are attuned to all the finance tokens because that was the original reason why crypto, why Bitcoin. It was a payment. It's supposed to be a payment, blockchain, decentralized payment. where you could buy and sell things. Like the first thing, what was it? Pizza. Someone bought pizza with Bitcoin. That's what it was. It wasn't about gaming. It wasn't about all these other things. Although I know that's what it's morphed into since then, and that's the there's nothing wrong with that per se. But the original reason, the original mission of crypto was decentralized finance. And so I believe in going back to the basics. And so I'm looking at the finance, the payment, the remittance tokens and such. And lo and behold, those are the ones overwhelmingly targeted by the Security and Exchange Commission. Do they know something that we don't know? Are they anticipating something that we're not privy to? I believe so. And so where there's smoke, there's fire. And I follow the smoke to the fire, and I find out that all these finance tokens are on fire and becoming bloody. And like I always say, I made my fortune buying the blood. I buy the blood. I buy bloody tokens. I don't chase green tokens. I chase red tokens. So, and there's a lot of red tokens, and it's going to get a lot redder before we get out of this. So, be ready. Have fiat on hand to pick up some of these guys. If you got anything out of this, I'd appreciate a thumbs up, like, subscription if you like this kind of technical analysis, and that way you won't miss any updates. I'm going to be doing a bunch more of these traumatized tokens, as well as the regular updates on Ethereum, Bitcoin, Zcash, a couple others that I'm doing also. And I also take requests. So people in my group, my trading group, I have a Discord trading group, very affordable, by the way. I'll also do theirs, and I'll do videos on certain ones that they request as well. So yeah, that's an incentive to check out the group. And if you have certain pet coins that you like, you could show them to me, and I'll give you my 2 cents, what it's worth. Again, not financial advice, but you can have fun with it and use it to do your own research. And so yeah. So all right, guys, I'm gonna let you go. I'm getting out of here. I got stuff to do, namely drink coffee, play with my kids, and look at some more charts. And yeah, so that's it. Talk to you later. Hope you like this. And strong hands. Adios, guys. Bye-bye.